So we're talking about building and maintaining good credit. So what is credit? Well, a credit is the money that you borrow. You can borrow through a credit card, a mortgage, car loan, consumer loan, open-end credits, closed-end credits, variety of credits. But credit is the money that you borrow. Unfortunately, with a building and maintaining good credit, it does not include your assets. All the creditors are interested is your credit history. So, um, the good side of borrowing. Well, borrowing may be safer than actually spending your own money. Borrowing may be easier. Borrowing may be cheaper. It may be the only way. Well, if you don't have the money, well, then the only way would be to borrow. And it might actually sound silly. Why would it be safer to spend borrowed money instead of the money that you own? But think of it like a credit card, for instance. Credit card offers you insurance. Some credit cards will actually insure the merchandise that you buy with the credit card. And also, say you're going to buy a merchandise that's a few $1,000s. What are you going to do? Like carry the cash with you to the store? It may be much, much easier and practical and safer to just use a credit card, some type of a loan to pay for it. And then you could use your own cash to pay down the loan. Um, you could always buy now and pay later, so you can enjoy the product while you're making the money to pay for it. So, meaning, it might actually take you 30 years to pay down the mortgage of a house, but while you're living in the house for that 30 years, you're actually living in the house. So buy now and pay later. So obviously, having a access to loans and credit also gives you that cushion, financial cushion for the emergency. So if you have any life emergency, or health emergency or any type of emergency, having some sort of a access to credit might come in very handy. So the bad side of borrowing is obviously the borrowing may get out of control. The number of credit cards that you have, how much money that you spend, you may not have enough money just to pay even the minimums, and it may get out of control. It may be tempting, when you have a credit card that says, congratulations, $5,000 limit, and you're thinking, I'm not even making $5,000. How is this impossible? But hey, I can go and spend $5,000 now. So it may be tempting, and it may become very expensive. Most people don't realize. Let me just give you an example. If you had a savings account and you put $100 in it, likelihood is you're going to get about 1 or 2 pennies a month, if that. Let me repeat that. With a savings account, if you keep, say, $100 in the account, you may get a penny, maybe two a month. And again, if that. But with a credit card, on average, it's about 24% that you pay a year, which means that if you have a $100 loan through a credit card and then you just don't pay, you know, and then let the balance accrue interest, at the end of the year, you'll end up paying $24 interest. Obviously, if you don't even pay the minimums, then you're going to pay the penalties and then you're going to get recalled and all of that, and it will be a financial mess. But you should also realize that you will, even if you actually obey everything, you're going to end up paying 24% a year. That is $24 on that $100. So borrowing money could be quite expensive. You could be victim of fraud. Having a credit card means that somebody could actually steal your identity, steal your credit card numbers, and use it. So you should be very careful about watching your credit cards, having your alerts set, and then receiving those text messages if somebody or you even spend money, and then you should be on the lookout all the time. Identity theft is an issue when you borrow money, simply because you will have all your social security number and financial information made available to somebody so that you could borrow money, and that somebody could be compromised. They could be hacked, and your personal information with it. And obviously, borrowing money reduces your privacy. You tell somebody how much money you make, what your social security number is, what your home address is, how much money you make, and that sort of thing. So it reduces your privacy. So, how much credit should you have? Well, it's all relative to your total income. But then you also have to realize that you also have what's called a disposable income. So let's say that you make $1,000 a month, and now you're thinking I could actually have a credit card that's up to $1,000. In theory, yes, but the problem is, off that $1,000, you actually have to pay rent, you have to pay utilities, you have to pay some must pay, or luxuries like eating, right? So your disposable income could be just as low as a few $100s. So your credit card or your the loan amount should not be actually more than your disposable income. Otherwise, you're going to have a loan that's actually more than what you can pay, which means that you're going to accrue interest and it will become a problem. So that requires financial discipline. So you need to actually have that financial discipline so that you do not end up with a financial disaster. So, what is a credit score? There are three credit bureaus: Experian, TransUnion, Equifax, and they follow your credit history. They follow everything that you do with respect to credit. Now, this is really interesting because if you go into your credit score, your credit history, you're going to see all your addresses that you lived in the past, anytime you rented a house, anytime you got car insurance, anytime you had a credit card, anytime you had any sort of credit transaction, your utility bill. I mean, you do realize that when you actually have moved into a place, you use gas and then you pay. That's a loan. You use electricity and then you pay. That's a loan. You use the water and then you pay. Again, that's a loan. So all of these might actually appear in your credit history. Anything that has to do with credit to you will appear on your credit score. None of the assets. I have a house, I have a car, I have this, I have that. Well, none of that is going to appear here. Anything that has to do with your credit will appear here. And that would also mean that people complain about you not paying on time, not paying the minimum, will also appear in your credit history. So the credit report is actually a report that these bureaus prepare for you. Um, and that includes all your credit activity, everything that you do, every credit card you own, every closed end and open end credit lines that you have, your car insurance, and every relationship that you have with respect to borrowing. You're going to see it in your credit report. And based on this report, they calculate a score. The score is out of 800 points, and I think the minimum you can get is like 300 points. Um, and having, I think, little over 600 or so, you're considered good. Over 700, you're considered excellent. Um, so I think in order to lease a car, you need over 700. And then I never leased a car, so I don't know. But I see the ads, they always say excellent credit score needed. That means you need more than 700. But this score is pretty similar, all three bureaus, and it basically calculated based on the credit habits that you have. So if you make payments on your credit score, on your loans and your credits on a regular basis, then your credit score is going to get better. How much of your available credit you use, called utility, um, or the percentage of your credit card limit that you use on a regular basis determines your credit score. How many credit cards you have. If you actually keep checking your credit score because you're applying for different credit cards, might actually hurt your credit score. So what is included in the credit report? No assets, credit card, mortgages, car loans, complaints, collections, and anything and everything to do with credits. So what affects your credit score? Well, your payment history, most definitely, your amount owed, percentage of usage of your limits, length of credit history. So if you have it for 1 year only, 10 years, 20 years, 30 years, the longer the better, because it gives the um, creditors a better idea of your credit discipline, your financial discipline. And then taking on more debt than what you can pay obviously hurts your credit score. And then the type of credit. So mortgage is good, credit card is bad. That's your scale. So you can actually go from car financing, a little bit worse than mortgage, obviously better than credit card, consumer loans, better than credit card, worse than car and a mortgage and that sort of thing. So longer the period, higher the amount that usually considered to be a little bit more favorable, like a house collateralized high, by the way. So that's considered to be a good credit, but then revolving like credit card, uncollateralized, short term, high interest, considered to be bad credit. So you have to be very careful. You have to check your credit report regularly. Legally, you have a right to ask for your credit report once a year for free. You have to check it, and all these three basically offer some sort of a membership, and then through these, you could actually get alerts as to what's happening with your credit score, what's happening with your credit activity. If somebody is actually stealing your identity, these alerts that you pay $10, $15 a month to receive might actually make your life so much easier for recovery. Simply because if somebody gets a credit card without you knowing, you actually get a message that says somebody checked on your credit score. You receive that, you could actually put a stop to it even before the person receives the credit card. But you don't do that, then you actually let other people take advantage of your identity. So you have to be very, very cautious and you have to check your credit report regularly. I check mine almost every day. Not that, you know, you have to, but I feel that, five minutes a day um, saves a lot of headache, right? Check your financial statements regularly. Like I said, I would suggest checking them at least once a day just to make sure that everything is in order and then you don't have any transactions that you do not recognize. And if you do, it gives you the right and the to report it to your bank and then promptly and then ask for help. So that's all I have for the building and maintaining good credit. So thank you for watching. And if you have any questions, please let me know. Thank you.